Okay, thank you guys, and thank you so much for having me here today, and thank you for the warm presentation. Okay, so today I will be talking to you about the winner's roadmap to successful trading. And you're going to see that I'm going to talk about two components within this roadmap. And the first one is mindset, and the second one is strategy. And it is very important for any trader to have these two elements under a very strict control. All right, so thank you for the warm presentation, and also I would like to add a little bit about myself. I've been a professional independent trader for more than 12 years now. I am focused on equities, futures, and currencies. I day trade and swing trade as well. I swing trade mostly equities, and I also day trade very actively futures. I am the founder and CEO of TradeOutLoud.com, which is a trading education firm. It's located in Detroit, Michigan. I have over a decade experience in investment banking, so I do come from a banking and trading background before decided to go on my own. I am certified from numerous financial institutions throughout Europe and US. I do run my own managed accounts program for a group of high net worth clients, and I'm the designer of a proprietary trading system. It's actually a very simple system that is based on price support resistance, and it's correlated with precise trigger times in the market. And for those of you that don't know, there are only 5 trigger times in the market that offer high odds trades with chart correlation and of course a strict set of trading rules. TradeOutLoud offers a lot of on-site seminars throughout Michigan, and we're going to start pretty soon throughout the country. And nevertheless, we do offer a lot of online classes and webinars throughout the year. We pride ourselves with offering top-notch education for equities, futures, and Forex, for day trading, swing trading, and for investing as well. We offer coaching and mentoring programs as well for active traders or traders that want to fast-track their trading and get their trading to the next level faster. I also, during the live coaching during the coaching hours, we trade a lot. We trade during live market hours, so we also do live trading within coaching and within our coaching and mentoring program. So here's our agenda for today. First of all, we're going to talk about how to shift your focus and develop a winner's mindset that will empower you to make money in any market environment every single day. The next thing that I think it is very important to touch base with you today on is how to make ours, and keep on repeating that process. Now, for those of you that are not familiar with ours, R is a risk unit, and we will talk more about the definition of the R and how you should go about the R and how to make these Rs, and we're going to talk strategy as well. How to maintain these Rs, keep these Rs in your portfolio, and keep on repeating the process. Also, how to stay motivated regardless of any circumstances. So how to be able to create that zone for you and work with that strategy that is working for you. So staying motivated is also part of a winner's mindset. Last but not least, I will talk about one strategy that works for me. And remember, in order for you to be successful and to make money and achieve your goals, you only need to learn and manage one single strategy. If you incorporate more strategies right from the very beginning, you're going to find yourself that you're going to be all over the place. So one strategy, make it your own, because trading is about finding your comfort zone. So the best strategy is the one that is working for you. And again, if you don't have that strategy, I will share with you one of the strategies that has doubled my account in less than 7 months, and this is swing trading. Definitely you could do more than that. Day trading, obviously you should be able to double, triple at least your account when you're day trading. And then I hope we still have a little bit of time at the very end, and if we do, we're going to talk a little bit about the market. All right, so let's get started with the winner's mindset. So as you know, trading is 80% mindset and only 20% strategy. Yes, you've heard me right, 20% strategy. Whether you're a day trader or swing trader or a position trader, it is only 20%. It is 20% of your trading. Whether you're a day trader and you trade gaps, or you're scalping, or you're fading, or you're trading momentum or pivots or what have you. So any strategy that you incorporate, it represents only 20% of your trading activity. The other 80%, it's all mind controlling. So it's the mindset. It's how your mind, the ability of your mind to control your strategy. This is the most important part. It is about controlling fear. And what is fear? Okay, we're going to talk again today, a little bit later on, about fear. But is it the fear of losing money? Is it the fear that you're on the wrong side of the trade, not knowing what you're doing, so you're not really ready for the market? You're not really well educated in that manner. So all these fears are going to alter your mindset and therefore are not going to make your strategy work. One other component of the mindset is how to control emotions. And again, later on, we will talk about emotions and how to try to control your emotions, because even to try to eliminate emotions, you cannot eliminate emotions. It's the human nature to be emotional. So it all comes to controlling your emotions and learning how to control your emotions. And of course, another component is controlling and managing risk. And this is going to give your mind ease about your strategy, because these are all interlinked with the strategy. So controlling fear, yes, when you're entering a trade, if you come from a losing streak of trades, let's say you've had a really bad week, and then the next week you come into the market with fear, and the fear that you're going to lose again. Okay, so my approach to mindset is to give you some glimpse of what I do on a day-to-day basis to try to keep this 80% of a winner's mindset in check. Okay, so what I'm trying to say is that your mindset and your ability to control it are the most important, and you have to keep them in check at all times. Your mind drives everything you do in life, and of course, trading is no exception. So you can see here the three most important components of the mindset. So it's the mindset itself, it's the psychology, then there's your money, and this is your account, but it also represents your capital, your ability to preserve your capital, and your money management. So this is your account right here. And of course the strategy, and this is your method. So you see, your trading system should be a very well greased machine. So there it is, your mindset, your psychology, and the way you think and you approach the market has to be in sync with your money management, with your capital preservation, okay, and the way you manage risk. And of course, it has to be in sync with your method. So it is a well-greased machine. And all these you're going to use on a day-to-day basis when trading, when you buy and when you sell. And also, of course, when you manage your stocks, and that's very, very important. Okay. Another thing is your attitude, and we're going to talk about your attitude towards trading. Your attitude will determine whether or not you're going to be profitable within your trading. So whenever you come from a losing streak, again, you're going to come with a little bit of fear, you're going to come with doubt. But don't forget one thing, that fear and doubt come from the lack of knowledge. So remember, if you have encountered a losing streak, make sure you go back to your manuals, make sure you go back to your recordings, review them, and see if you have applied everything to the T, as the strategy as the strategy implies. And also make sure that you go to your trading plan and make sure that you have a trading plan. It is imperative to have a trading plan because that's going to change your attitude, because it's going to give you a precise schedule of what you need to do at certain times of the day and what you need to do when you identify a trade, where the perfect timing for your trade, your entry parameters, your trailing method as well, and that's going to keep you in check. It's going to keep your attitude in check. Now, the other thing is that if you come from, let's say, a week where you have achieved great winnings, you come into the market with extra confidence the next week, and that extra confidence may be negative because it may cloud a little bit your judgment. So make sure you keep that in check, and you have to be well balanced with your whole mindset. The other thing is that your attitude is most important than your market knowledge at times and your degree of skill. And it is important for you to know how to react to the market and not what the market does to you. So again, if you have a losing trade, remember that you have to make sure that you don't go back in the market and you do a revenge trade. Make sure that you give it plenty of time to analyze it and see why that was a losing trade, and then again respect the market. So it is important what the market it is important how you react to the market and not what the market does to you. Okay, so follow the market and the market will be generous with you. And again, losing trade. If you have a losing trade, remember, losing trades are part of the program, are part of your schedule, are part of any trading, are part of trading. And that's not the issue. The real issue is how you react to your loss. Is how you react to the fact that you've had these losing trades. Do you get emotional? And again, remember, check your attitude at all times. Does that alter your trading style? So start introspecting yourself and see what is wrong, and were you emotional? Did you get out of the trade too early because you saw a little bit of gain after so many days of losing trades? So again, do you have your judgment clouded or switch to revenge trading? So we've all done that, revenge trading, at one point or the other, because sometimes the market plays tricks. It is sideways and sideways. What I mean by sideways is not always like a Christmas tree lay, like with the candlesticks, but it does that swing low high, contained into a very narrow range, and then you enter those setups and they don't work for you, and then again you could see that it's trying to go higher and then pulling back, and stops you out, especially if you're a scalper. But remember, don't do the revenge trading, okay? But at the same time, remember that if a stock was generous with you and you have had gains in that particular stock, don't give it up. Just revisit that stock as well. Or a negative entry on a stock does not mean that your next entry in the same stock is not going to be a positive one, that it's going to end up with green in your P&L. The other thing is to respect your plan and accept the loss as part of your trading plan and then move on. Remember, you have to be comfortable with your losses in trading, and that's why you have to have a proper risk management and money management in place. You have to allow yourself a certain amount each and every single day to lose, that you feel comfortable about losing, because this is what it's all about. Sorry about that. Okay, market open. Okay, so remember, you have to have a very positive attitude. You have to be confident when you come into the market. You have to be bold and act and apply your strategy. You have to be self-reliant, and this is very, very important. So ignore what everybody else is saying, because the patterns that you see working, remember, trading is visual, and whenever you have a winning trade, your brain is trained to remember that setup, and it's going to take you back, and whenever you're going to see a next setup that will develop, your brain is going to trigger, and it's going to alert you about that particular setup, and you're going to go, yes, this is where I'm going to get in, and this is my stop, and that's my target. So you have to be self-reliant. Now, caution to those of you that, and I don't see anything wrong into being a big part of chat rooms. Then, after all, trading is solitary, and you could get lonely trading by yourself just in front of the computers. But use these chat rooms as a scanning device, and don't take somebody else's trade just because they're calling a trade and you don't have a trade for that particular time. So be self-reliant. Assume your risk and assume your responsibility. Also, you have to be secure, you have to be courageous and brave at the same time. Some other components about having a winner mindset, well, first of all, is have patience, and have a lot of patience for that particular setup to develop. Don't jump into the trade just for the sake of like, okay, I'm going to get in right now. I'm going to get in early because I'm going to have a tighter stop, and therefore my risk is going to be less. Remember, when you have a tighter stop and you have less of a risk, at times, you get more often stopped out, and this is applicable especially to lower time frame charts, and for those of you that, especially those of you that are scalpers, day traders. Patience is one of the key qualities you need to have in order to be able to deal with different situations in trading, from the point you enter the trade, how to manage your trade, and how you wait, your patience to wait for the target, and again, your trailing method. You have to give it a lot of time and a lot of patience. Also, confidence. And again, confidence, I said it again, confidence comes from knowledge, and you have to be very well educated in trading and technical analysis. You have to be aware of what's happening with the market, and that's going to give you confidence in your trading. So self-confidence is a measure in your belief in yourself and has a number of consequences of trading if you should lack it. So essentially, being successful requires you to trust and follow your trading plan. Confident traders rely on their own judgment and not what others are saying. So remember, make your own trading decisions. I know it's really easier when you're in a chat room and you follow someone, and then if that is a losing trade, it's easy for you to say, oh, it's a losing trade. Okay, so that moderator is not good. So, but again, each moderator is trading their own trading plan. You might not know if, and especially you're a new trader in a new chat room, you might not know that moderator's trading plan, right, or their strategy really well, or because in chat rooms you don't really talk method, you talk a lot about entry, stops, and scanning, right? So take full responsibility of your trading decisions and make sure that the sooner you realize that you have to put a little bit of elbow grease and you have to do a little bit of homework, and when you start doing your own scanning, it is and you start taking your own trades, that's when your trading is going to shift dramatically to a higher level, and you're going to be able to see things in your trading and to see your trading evolve, because you're not going to be following someone, you're not going to be dependent on someone, relying on someone for your decisions. You're going to be able to make your own decisions, and you're going to see that your decisions are better because they fit your plan. Okay, last but not least, I'm going to talk about emotions. And, emotions are probably the single biggest problem we face when trading, along with the lack of discipline, right? Because when you're following someone else, you're not respecting, you're not following yourself. Or there were times when you get in a trade, let's say the trade goes higher, and you see green for the first time in your P&L in a very long time, and you just get out of the trade. Okay, so that's lack of discipline for following your plan, your trading plan. That's because you have to wait for the market to take you out. You have to wait. You know, you have to have a proper trailing method in place. You just don't get out just because you're done. You saw the green. You saw a nice number there, and you're out. No, you have to educate yourself on how to make more and how to stay more. It's a learning process. You can limit the emotional impulse by trading by having a trading plan, and I said that many, many times. And the trading plan doesn't have to be like a 20-page book or a PDF. No, it can be like a simple plan. It's a 1-page or half a page where you can highlight the time of day that you're going to trade and your most successful trades were taken at, the areas where most of the trades that you take are successful, whether you're using moving averages, whether you're using pivot points, or what other indicators you may be using. So it has to be very, very simple. And of course, your trailing method and your exit strategy. Also, emotional swings and emotional stress do impact your mental state and can ultimately alter your trading decisions. So when trading with emotions, you don't trade logically. When you have a cold, when you're going through dramatic, events in your life, or even very happy events in your life, you're going to see that you're going to become imbalanced with your trading decisions. So when you go through emotional swings, it's better off to not trade that day or to not trade that portion of the day or that particular week. So let things settle down before jumping back into the market. So no emotional. In trading, you have to learn how to separate, how to educate your emotions, not to separate them, because it's impossible to separate your emotions from trading. It's like fighting a losing battle, and all we need to do is just separate emotions. To educate our emotions. And why is that? Because we're dealing with money, right? We're dealing with the most emotional commodity in the world. And money outlasts hate, love, greed, and anything else you can ever imagine. So remember, keep your emotions in check. If you're going through some things in your life, if you feel that your heart is not happy, or you feel emotionally distressed, do not approach the trading. Okay. Another thing that another thing that I wanted to talk about today is expectations. And I know that a lot of traders, especially when they're just getting their feet wet in trading, I get a lot of questions. It's like, okay, how long will it take me to be successful? How long will it take me till I make money? How long till I see my account go from this figure to this figure? Well, it's different. For everybody's different, and everybody's level of education is different, and a level of handling their mental state with their strategy is different. So therefore, whenever you start your trading career, you have to have realistic expectations, okay? Very realistic expectations, and you have to make sure that you take baby steps and don't just take big leaps or big jumps and, saying, oh, I know it all, okay, I've done this course, I know it all, and I'm just going to apply it today in the market, and I'm just going to make, a fortune in the next 3 months. It doesn't work that way. So you have to have very, very realistic expectation. And actually, you have to plan these, you have to plan your goals, and you have to plan your risk before you even start trading. Another component is in search of the Holy Grail. Now, I know that there are a lot of traders, and if you, and here are 2 categories, and the first category is like if you have been trading for more than 3 years and you're not profitable, and you're webinar hopping, and you're just searching for, or chat room hopping, or education hopping after 3 years, at least 3 years. And if you're in search, it means that you're in search of the Holy Grail. Well, let me tell you something, it does not exist. and the thing is that with this category of traders that are just hopping around searching for the best strategy and all that, they really don't want to do the homework and sit down with one strategy and make that strategy work for them. But instead, it's easier to hop around, you know, and try to find different strategies and find different indicators and just, you know, hover around, you know, all the traders and try to see what, you know, what everybody's doing, but that's going to get them nowhere. You have to, the thing is that you have everything at hand. I'm pretty sure that everybody that is in this room has one strategy and has one strategy that is making them feel a little bit more comfortable than other strategies. So all you need to do is just embrace that strategy, tweak it, make it your own, make sure that the strategy gets into your comfort zone and meets your comfort zone, and take that, apply that on a day-to-day basis. So you're going to see how that strategy is going to become your most successful strategy. Now there's another category of traders, and these are beginner traders, and it's fine for beginner traders to do the seminar hopping, the webinar hopping, to do the chat room hopping and all that, because they're trying to discover themselves. They're trying to discover different styles that would ultimately they would choose one from and then run with that particular strategy and make it themselves. But again, the latter part, you know, the first category of traders become dependent on these type of hovering around, trying to search, and what they're doing is they're blaming others for not succeeding in their trading career, where it's their fault. Okay, where it's their fault. So last but not least, I'm going to talk a little bit about fear, and this is the last component of the winner's mindset. Fear is the #1 enemy in trading. And here's the definition of fear. Fear is this distressing negative sensation induced by a perceived threat. It is a basic survival mechanism occurring in a response to a specific stimulus, such as pain or threat of danger. Now, go back, and we all had those losing trades, right? When you see that trade that stops you out, you feel, you know, or you had that losing streak, you feel that sick to your stomach, you feel like really, really bad, and that's because your body becomes chemically imbalanced. Okay, so it is a natural stimulus from the body to feel that way. So that's a very, very negative sensation, and that truly alters our decisions moving forward. So you got to step back, and you have to make sure that what is making you what is the #1 thing that you fear most, and take each and every little single thing that you feel that it's holding you back, and analyze it and see how you can work with that. So for instance, is it the fear of losing money? Now here's the thing with losing money. Make sure that every single time you enter a trade, you consider that risk already gone, because you have to be comfortable with that loss. So let's say if your risk unit is $100, you have to be very comfortable with losing that $100, okay, in that particular day. That is the fear of losing money. So make sure that you're comfortable with that. And the other thing is fear of not being able to make up for your losses, because you feel that you are digging a big hole, and you know you have loser trade after loser trade after loser trade, and that's also going to alter your chemical reaction in the body, and it's going to provoke that imbalance. So make sure that you go back to the drawing board, you review all your strategies, you even go back to paper trading, and paper trade until you feel more comfortable that you're ready to go back into the market. Another element is fear of letting your profits turn into losses, into losses. here's the thing with profits. If you don't have a proper trading plan, and the fear comes again from the lack of knowledge and from lack of having a true plan. So if you have a well-defined plan, a trailing plan, your profits are never going to turn into losses. And why is that? Because once you know how to enter a trade correctly, place a stop, and once you have a trailing plan in place and a management plan in place, so you know, let's say for instance, your stock reaches your target one area, and this is just an example here, your stock reaches your target one area, place your stop at break even. From that point on, you're going to have a risk-free trade, and that's going to give you peace of mind. And knowing that you cannot lose anything on that trade and your stock is already at your target one level, make sure and take one extra step and take half of the profits off. So you have some money in your account already, so you're already in the green, and therefore you have a risk-free trade. And then for the second part of the trade, you're going to let it run. Okay, and you're still involved in the trade, and you're relaxed. You don't have that fear, and you don't have that fear that is going to rush through you. Another thing is fear that your decision is not right. If you doubt yourself, then don't take the trade. And again, if you have to squint at the chart and you have to force a trade, that trade is not there for you. There are thousands of other stocks that are available and that are trading. You don't have to be pinpointed at that particular stock. So remember, if you have to squint, if the setup, you can't see the setup the first moment that you see the chart, then that's not there. Just take it off and move to the next stock. There's also the fear that your strategies are not working, and make sure you check your strategy, make sure you check it with someone or consult with someone to make sure that you're on the right path, and I think that's very, very important. Here are my 6 conclusions from this winner mindset. Well, first of all, you have to learn how to know yourself, introspect, self-examination, and take a close look at your relationship with money and how you handle money. And this is very, very important. Make sure you get into that comfort zone and make sure you consider that risk that you allocate per trade and you're comfortable with that risk to be gone. Also, get an education, get proper education. It's fine to go here and there and to get bits and pieces of education, but remember, get proper education, because this is going to be your career. This is your account. In some cases, you know, this is your retirement account, or this is your life savings, and you want to make sure that you invested properly. And the first thing that you need to invest in is proper education. Then learn how to analyze. Technical analysis is a must in any kind of market. If you've been trading for a while and if you've been listening to, I would say, CNBC, you know, remember 10 years ago, CNBC was mostly based on fundamentals, where now when you look, they're talking a lot about technical charts, and this is from the last 5 years or so. They're talking about support, resistance, they're talking about Fibonacci's, they're talking about buy setups and sell setups, they're talking about all these different elements of indicators and so on and so forth. So remember, learn to analyze and learn learn technical analysis and proper technical analysis. Also, learn to predict. You can learn how to predict the market movement through proper technical analysis. Also, take baby steps when it involves trading. Remember, don't go directly in the market, paper trade at first, and then if you see that you are successful, go into the market. Once you have a losing streak, go back to paper trading and see where your mistakes were, and also do a little bit of self-examination and a little bit of self-coaching with yourself, and that's going to help you a lot. Also, manage and prosper. Last but not least, manage the trade properly, and you're going to see your account grow. Okay. We're going to move on to the next chapter that I wanted to talk about in today's presentation, and that is how to make R's, keep R's, and keep on repeating that process, because this is key right here. Okay, so what is an R unit? I don't know how many of you in here are familiar with the R's. and how many, because I know a lot of you use percentages, a lot of you, but I know that some of you use the risk unit, and I find it perfect. And I find it that the R unit helps me a lot. Yes, sir. Okay, so a risk unit is the amount of money you are willing to lose. Okay, so I've highlighted here, willing to lose. So you consider it gone. It's gone. Okay, if you are wrong about the market, and more specifically, it is how much you'll lose per unit if you're of your investment if you're wrong about the position you're in, right? So the risk is the difference between your entry and your stop. So let's say you have stock ABCD and your entry is $8.25 and your stop is $8 even. Now that 25 cents, that is your stop. According to that stop, you're going to position size and you're going to determine your risk unit according to that position sizing, right? So you're going to determine, let's say that, you know, that particular 25 cent stop translates into, let's say, $100 or $200 risk per trade, or even $1,000 risk per trade. It all depends on your account size, okay? So make sure that you keep these R's in check. So here are some risk unit rules that will keep you on the path of making money consistently. Number one, always risk the same amount. Absolutely, it was, and the R is taught very, very well. For those of you that have not read Van Tharp's books, I highly recommend them. It is of tremendous value. Very well pointed out. Also, so like I said, always risk the same amount on each and every single trade. And why is that? Because when you're going to have a losing trade, let's say you're going to have the first losing trade, the second losing trade, and the third losing trade. If you risk $100 on each trade, so therefore you're going to have 3 losing trades, that's $300. Okay, when you're going to have your fourth trade, if you are going to apply a reward to risk of 3 to 1, then you're going to see that that fourth trade is going to cover for the first three trades that you've lost in. So what I mean by that is that one good trade can erase 3 bad trades if you know what you're doing and if you apply the same risk amount on each and every single trade. So it's very, very important. Another thing that is important is to look for at least 2 to 1, 3 to 1 reward to risk on each and every single trade. It is very important. Never increase your risk unit unless your account size grows by at least 20% if you're risking 2% per trade. Okay, so don't, like, let's say you've been having a really good week and you decide to up your risk. No, what you need to do is to make sure that your account grows by at least 20% before you're upping up your risk unit. And of course, position sizing. Position sizing is key. So make sure you position size properly to each and every single trade. Okay, now how to stay motivated regardless of any circumstances. Now here are some keys and here are some things that, you know, I apply in order to stay motivated and in the market in any circumstances. And you know, there are times, and especially throughout the summer, we've had some really tough trading environment, and especially for swing traders. It was definitely not a swing traders environment throughout this whole consolidation process in the market. There were some stocks that you know, that offered follow through either higher or lower, but at the same time you want to make sure that you have everything coordinated with the market, and at some point, you know, you don't want to be overly aggressive because you really, you know, there talks about the rate hike, and you know, during the summertime period there is not a lot of volume and therefore not a lot of follow through. So you know, to be honest, I took a little break, throughout the summer, and I did really well taking the break. So here's a quote that I love from Dalai Lama, and a disciplined mind leads to happiness, and an undisciplined mind leads to suffering. There could be nothing true about it. So traders and investors don't always have the discipline to stay motivated throughout the process. So how to stay motivated? First of all, develop a routine. Life and trading. And through trading, again, the routine is through the trading plan. Take trades at certain times if you're a gap trader, and if you're only a gap trader, make sure that you specify that you kind of like get into the zone in that specific time, and you're one with the charts, and develop a routine for that hour of trading or 2 hours of trading that you allocate to your gap trading. Same with life. You have to have a routine in life. So before you commence trading and come to the computer, make sure you have a routine, a well-planned routine before you start trading. You don't just jump out of bed and it's like, okay, I got to, I'm in my pajamas. I'm like, oh my God, I'm so tired. I'm going to pick up my coffee, and I'm just going to turn on the computer, see what the chat room is talking about, turn on CNBC, see what's happening in the world, and then I'm just going to take a trade. It's not working that way, okay? So you have to have a really well-balanced life and really well-balanced trading plan in order to develop that, really good trading skills. Also, take breaks. I like this quote by Gretchen Rubin, and I decided to share with you. To keep going, I have to allow myself to stop. Okay, so to keep going, I have to allow myself to stop. And there could be nothing true about it. Like I said, I saw this mess that was happening in the market, and throughout the summer, now I've decided on, July 31st, I'm going to take the summer off. Okay, I'm going to take the summer off. I'm going to take some time for myself, and I'm going to enjoy the profits that I've made throughout the 7 months, right? And we're going to get back into the market in the fall season, because I know the fall season is the cornucopia for traders, because it offers so many trading opportunities that you could see, And basically, the fact that I haven't traded in August, September, and part of October, is fine, because I've made so much money in the last 2 weeks, that have covered for, and I'm going to share with you some trades that I've done that have fully covered for those months that I haven't been trading. Also, you have to reward yourself. Always reward yourself. Okay, so after you make a certain amount of profit, to take a trip, or just reward yourself. However you feel, just buy something for yourself or for your house, or whatever makes you feel better about trading. Okay. Another thing is, have a flexible mindset and try learning different markets and strategies that break the usual routine. And usually this is a perfect, summertime is the perfect time to do that, because in the summertime the markets are not that very active. And if you're an equity trader, try learning to trade futures, so try to skip away and try to break away from the same routines that you have been going, okay? Also, review your trading performance every month, quarter, and year. It is very important. I even do it on a weekly basis. That's because, I'm partly, responsible to do that, because I do manage a fund, and I have to do that every week, and also every month, quarter, and year. But it's great to see it it's great to see your trading performance, and it's great to see what strategies worked best, what sectors and what stocks work best. And therefore, as you would advance through trading throughout the years, you're going to learn to know how to periodically, trade certain things, and trade certain aspects. Like you would know that towards the end of the year, oil usually, oil stocks are better to trade. Energy sector, let's say, it's better to trade. Or, so there are certain periods, and if you do this analysis in this trading performance, you're going to be able to have this data that works for you. It's going to work for you in the future. And that's also going to create that routine. So you're going to know, okay, it's this kind of season or this kind of season. Also, have someone to whom you can talk about trading. So a trading companion. It is very important for you to be at the same on the same page with the person and at the same level. Of course, if you're a beginner trader, try to find someone that has been doing this for a while, because there are a lot of things that that you can learn, and also you know, it gives you confidence in the market, and it's going to give you more confidence in approaching the market. Of course, you're going to, you know, broaden your horizon with new methods and new challenges. Okay. I love this quote. When an individual is motivated by great and powerful convictions of truth, then he disciplines himself, not because of the demands of others, but because of the knowledge within his heart. And I love it. Okay, now, time for strategy and time for charts. I think we still have, we started at 9:15. I think we still have about 20 minutes left, right? I think. Okay, about 20 minutes left. Okay, so let's talk about strategy. What if I told you that there's one simple strategy that you can learn right now, and I'm going to share one strategy that will allow you to conquer the stock market forever. And not only the stock market, but you can apply this to futures as well. Okay, so let's talk about the strategy, okay? Okay, we're going to talk about buy pockets. These are the specific buy areas that happen at certain points, and I do have a lot of charts to share with you guys, so please bear with me. Okay, what is a buy pocket? So a buy pocket is exactly, you know how a pocket is, either a rounded bottom, either a sharp bottom, a V-form bottom. Okay, so it is an early entry point within a potential leading stocks consolidation or reversal from correction pattern. Okay, also, when utilized as an entry within a consolidation or reversal from correction, it provides an early mover, and that's the advantage of a trader. And one other thing that I wanted to point out here is that within a stock's move from bottom, from the swing low to the swing high, remember, you don't have to capture the whole movement. You just have to capture portions of it, okay, in order to make money. And if you adapt that portion with a proper risk to reward, and if you can get 2 to 1, 3 to 1, then you're all set. A buy pocket is a continuation of a buy point of a leading stock that is already firmly formed in a strong uptrend. This offers both a way to get on board strong leaders later on in their uptrends, like I said, as well as extremely reliable and powerful tool for adding to positions initiated earlier when a stock was still within or just emerging from its original consolidation or reversal from the correction pattern. And here are some examples. For instance, this is Facebook right here, and this is a daily chart. Like I said, it can be applied to any type of time frame. So if you want to go to the 1 minute chart, the 15, or the hourly chart, or even the weekly chart, it all depends on what kind of trader you are. You're going to see that this method works each and every single time. Before we continue, yes, I will share with you the moving averages that I use. The blue one right here is the 20-period moving average, and the red one here is the 200-period moving average. I also use another moving average. It is the 10 exponential moving average, and that I use on small time frames, and I use it for day trading only. So we were talking about buy pockets. So buy pockets are these formations that happen, and I usually tend to look for these formations when they happen along these moving averages. They have more accurate setups when they form here, and they bounce more, and they bounce off these particular areas. I'm not a big fan of moving averages, but a lot of traders use moving averages, and these moving averages are the most used moving averages for a lot of traders, and a lot of traders look for setups at these moving averages. So therefore, that's the reason why I'm using it, not because I'm a big fan of moving averages, because price is the only true indicator. And at times I truly take even moving averages out of the chart and just pay attention to price support resistance. Okay, so here we have a moving average. Is this a really good moving, I'm sorry, we have a buy pocket right here. Is this a really good buy pocket right here? Well, let's take a step back and let's analyze it a little bit. Well, it is residing on the 200-period moving average, but at the same time, it's below the 20-period moving average. And Facebook, we know that has been in a downtrend, is just reversing. And then you're looking at the price that is contained between these two moving averages. So this is not really a proper setup. It is a very aggressive entry for a lot of traders and traders that know what they're doing. Okay, so this is a very good risk to reward right here. Even on the daily chart, you can see that it triggers. So for aggressive traders, for traders that have been doing this for quite some time, okay, this might be a good entry, but not for beginner traders. Okay, so it pops up, it consolidates. You can see that it consolidates sideways, even testing support, testing prior candlestick support right here, daily support levels when you look to the left of the chart, and therefore you can see that it even comes into a minor area of support right here from these prior highs that were set up from this buy pocket right here. But this is the buy that we're going to be looking for. This is a buy. This is where we get in right here. This green candle breaks above the prior high, the prior day's high on the 20-period moving average, breaking higher, breaking above the area of resistance and consolidation that has been going on for about two weeks or so prior to this price emerging higher, and it is taking it higher. It comes back, but when you see it come back, it's testing the 20-period moving average, but yet never test the prior low. So this is a great indication that the next day, if you're a swing trader, in and out swing trader, you could see that this is your another entry opportunity right here. Or if you're trailing, this is a great method to raise your stop and place your stop below this low right here. So it's coming back. This is another entry opportunity. And for those of you that, you know, because we always miss entries. So the main thing is that once you see a pattern emerge and break out, always have that stock on the watch list, because you have it on the watch list. Even if you miss the first entry or the second entry, you're always going to have entries. You're always going to have alternate entries. So here's the third alternate entry, and this is a good confirmed one. It is developing again here on the 20-period moving average with a buy that is breaking through this 20-period moving average. A daily support level is higher than the prior low that was set on prior days, and it's breaking out beautifully, challenging here. You can see on this third day after the breakout of the buy pocket, it's residing in the prior support, in prior resistance area, and then moving higher. So you can see that it has accelerated here. Now, once you see this pattern form and it's getting a little bit extended from the 20-period moving average, remember, in a very excessive strong market, this can continue higher regardless of where the moving average is. But if you have reached your goal areas for this particular point, it is safe for you to manage. And on the first sell that happens, here, so this would be the candlestick that would trigger your out area. This is your exit area, your exit zone right here, because you have banked this whole profit along the way. And then you're going to wait patiently for another entry opportunity. Now, is the other entry opportunity going to be here? No, it's not, because it's still extended, right? So you're going to wait patiently and look what happened. It enters a very sloppy consolidation phase until it gets very, very close to the 20-period moving average. Now you can see that there were a lot of buyers here that bought this bottom, that bought this stock from this 20-period moving average, and then it was back to the bottom. But here's the other accurate formation that you should be waiting for, and this is the buy area right here. This is the entry zone, and it carries higher. Now again, remember, target areas. This should be your first target area just because it is a prior high right here. You can see that once it reached this prior high right here, it entered into a 3-day consolidation phase from which it broke out. Now on the first sign of sell, this would be your exit area right here. Okay, you can see the prior day support area. Once it breaches the prior day support area, you're done. It is extended from the 20-period moving average. This is where you're going to trail out pretty much. You've made more than 3 to 4 R's on this trade, and you're going to wait patiently for another setup to occur. So it's pulling back. Whether you could have got in on this trigger right here, or you would have waited for this one, you would have seen that this rally was not fully met into the prior resistance areas. But guess what? Remember what I said earlier: the safe way to trail and to have a trading plan in place and not turn winners into losers. And how's that? On the first trigger, here it is. Pretty much first target is into this cluster resistance area right here. You place your stop to break even. So you had nothing to lose here, and it didn't stop you out. It trailed you out at break even. The stock went lower. It started trading below the 20-period moving average. You can see a sell happening here. Now this sell, I would have shorted this because it just started to uptrend. So we had that flurry down, and that happened. It was very happening with it was in sync with what the market was doing back in August, and then moving back up. It was a very sloppy, very sloppy period to trade here. No clear setups and no clear buy pockets that formed along the way. Again, we had a flurry down 1 month later, the end of September, and then here's the first setup that actually formed, and this was in October. This is the first buy setup, and for those of you that are know me and have followed my newsletter, I have a newsletter that I deliver for free on each Monday before the market opens with trading ideas and market insights. I will answer the questions. I'll reserve time for the questions, but I'll try to pick some. Okay, Micah, and below the body of the candlestick again, please. Okay, you want me to review? So, okay, so here it is. Entry is right here. Okay, so if you entered the trade in this zone, it would have went higher. Your first target area is within this zone right here, this cluster of resistance. Okay, so pretty much when you see it go and trade into your target area and into your first target area, my first rule is to put my stop at break even. And this offers me a break even trade. And when the trade does not work and come back, I'm going to be trailed out or break even. So I'm not going to have a loss, well, except commissions, right? But I'm not going to have a loss on the trade. And I'm going to be trailed out, and I'm going to wait for my next entry opportunity here. Okay, so then you can see how it went higher. Of course, target areas were in prior high areas. Remember, the left of the chart, the left-hand side of the chart is going to provide you all the clues you need for your trading. Okay, the next stock, okay, here's the Qs. Okay, Qs trading yesterday over 114.50 or 114.46 or around that area. Okay, look at the beautiful cluster that has developed here. I'm not even going to, highlight this. Of course, this is a textbook setup that it had happened here. It is contained between the moving averages, but again, it comes on the 20-period moving average, and it comes above the prior resistance area from a prior pivot high, and it has a 4-day consolidation. Look at a similar pattern here, but of course it is extended from the 20-period moving average. But again, here it is trading into a resistance area from a prior high, and this is the yearly high right here. This is the daily chart, and it comes with 3 days consolidation and the breakout. Let me just pull the chart, the current chart of the Qs up. Okay. Here is today's chart. Okay, so you can see this 3-day consolidation right here just broke out higher, another 2-day consolidation here, and broke out even higher with a new high on the day today, 115.47. So these are the buy pockets that emerge from V formations, like we've talked in Facebook earlier, or consolidation phases right here. Okay. Okay, here's another stock that I pointed out in the newsletter. Remember, the newsletter is free. You just go to the website, TradeOutLoud.com. There's going to be a pop-up window, and you could actually register your email, your name and email. You will receive the prior low, and here's my entry opportunity. Here's my entry right here. It just continued higher. Beautiful, beautiful continuation higher. And last week I had this class again. Last week I had this class, the same presentation, and I was highlighting as we were talking. I was highlighting this buy setup that is forming on CVX that is extremely profitable. So if you've missed this entry, you can actually take an alternate entry right here. And once it clears this area, I was mentioning the fact that it's into void all the way to 95 and $97 area. So it had a good risk to reward potential for a continuation higher. We talked about that last week. So let's talk about CVX now and see where CVX it is now. That also could have been a really good ad area for those of you that were in the trade. So here is my initial entry in the trade. The price triggered above the 20-period moving average. It had a really nice rally with great profits along the way. So this is, again, it's one strategy that is working for you, and you don't really have to trade a lot. You don't even have to go through a lot of stocks, you know. So I've been in this one for quite some time, and it's just that gift that keeps on giving. Okay, comes back here again. It comes back here into this low. This is the alternate entry. If you would have chosen this as your stop loss area under $87, remember this is a whole number, so you have to give it a little bit of room to breathe and to swing. But again, if you would have been out in this area, again, it is a great area for you to have a stop, just because in a prior high right here sets up an area of support. It is an imminent area from which this stock can also bounce. So if you place your stop here, let's say it would have been stopped out here. Okay, this would have been your, trailed out here. This would have been your alternate entry opportunity. Or if you had a flex stop in this area, which I use, you could have reduced your stop to $86.60 under this area, added more shares in this area right here, and then go for the big reward. So remember, I said $95, $97 area is the next target area for CVX, and we've talked about that last week. Okay, I'm also going to share with you my 7 rules that I follow. Number 1 is trade stocks that have relative higher volume. Look for an increase in volume compared to the previous 5 to 10 days. Also, stick to stocks that have a pattern of beating earnings, especially for those of you guys that are swing trading, and never stay in a stock that reports earnings. So always get out before reporting earnings. Always get out before reporting earnings. Also look for fundamentally strong and solid stocks, especially towards the end of the year. Also, buy pockets are often formed from base breakout patterns, but also from gap patterns. For those of you that are day traders as well as swing traders, or just swing traders that are paying attention to gaps, a lot of these patterns emerge from gaps, and especially in earnings season, and we're still in full swing earnings season. Also, buy pocket location. Remember, it's like real estate. It's the only thing that matters and is going to drive the price higher. Preferably, it should be above the moving averages. Remember that I use the 20 and the 200 period moving average for my daily charts. But if volume is increasing and building up at least a few days in advance, then you can consider the area as the buy zone. And prior support or resistance areas that translate now into influence zones for future price action. Now, number 5, do not buy any pocket or any formation in any stock that is into a severe downtrend. And what I'm talking about is for swing traders and for core traders, 6 or more months. Okay, they're not bargains, trust me, especially in the end of the year, they're not. Wait for the stock to bottom out, form a confirmed change of trend like we have identified one in CVX. Stay away from stocks and ETFs that are trading below 89 and 200 period moving average, and that is below if you are a core trader. And now I want to share with you, because I get a lot of emails, a lot of emails. So here's another example is Twitter. Okay, Twitter is into a pattern reversal. This is the daily chart right here. I have some Fibonacci's that are drawn out right here, but it just broke. Once it broke that $35 area, it just started to bleed the gap down. But guess what? Remember what we talked about CVX and about CVX and you know, the way it had reversed. Now here it is. Perfect reversal time. I do have shares of Twitter that I bought yesterday, and this is the bottom right here, $21, and it went up, challenged a prior resistance area, and then came back down, formed a new support area higher than the prior low right here. It burst through the first area of resistance, continued higher, and it entered into this consolidation phase. Now, I love the fact that this consolidation phase, and the reason why I bought it, even though the price is not trading above the 20 period moving average, the fact is that if I draw a line here, and you can see my cursor, this prior high right here, this prior high, prior resistance area, translates into a lot of support that it creates right here for current price action. So this is the reason for my buy. So I bought this at $29.20 yesterday. This was my buy, and I'm looking for a first target into the $31.80, $32, and then if the follow through should happen, you could see more upside into the $35 and $36 for a swing trade. So this is what I wanted to share with you guys about reversal, and it's you know, so you know, even if a stock is in a severe downtrend for 6 or more months, remember, you're not going to hop on and you're going to say, oh my gosh, this is a great buy. No, you're going to wait for a confirmed reversal, and that's when you can lure it. And I don't have a lot of shares invested in, so I took it with half size. I took it with half the size. Also, stay away from stocks and ETFs that trade below the 89 and 200 period moving average, and I said that, and this is for core trading. Now, also, sharp pivots have an increased risk of failure than rounded bottoms and consolidation, so I really love these rounded bottoms. And another perfect example is here, again, with Twitter, and this is a sharp V formation, a sharp fall, and again, you could see that the stock did pop up, but again, it just didn't create the follow-through of continuing higher. The next thing that you should look at for these consolidations that happen, they offer higher odds of happening. This is another example to the downside, and this is a sell pocket. Remember, is the buy pocket, but in reverse. Okay, so you're going to look for these sell pockets that form below the 20 period moving average, getting extended. You're going to wait for the pullback, getting extended. You're going to wait for the pullback. Another example is Nike right here, and Nike, again, we can, oops, sorry, the other way. Okay, here it is. Nike is entering a really nice consolidation phase again. Again, I pointed out in the newsletter, the entry was right here, right above 121, and it created a good follow through. And then again, an alternate entry if you've missed the first entry set up right here. Or look at this 3-day consolidation right here at about 125 price range, and that offered the breakout. And the breakout is usually super, super powerful because it is within a multi-day resistance area. So these breakouts are really, really powerful. So if you want to take a look at Nike now, okay, here it is, consolidation phase. It offered a really great move to the upside, and it's right into a consolidation phase. $130 is the support area, and $132 is the resistance area. So this is what I'm going to watch, a break above $132 area for a continuation higher. The next stock, Microsoft, another example. Here is a perfect example of a perfect alignment of the 200 period moving average and the 20 period moving average, and moving slightly higher, breaking down another entry point right here. And again, consolidating on the daily chart, current daily chart. Intel, love this stock, bottoming right here, in sync with the market, forming another buy pocket into the vicinity of the 20 period moving average, moving higher, and then pulling back down. Consolidation phase right here, strong consolidation at the area of the 20 period moving average. And look, once it breaks, if you missed this, look at this bull sandwich right here that is offering a perfect entry above this resistance area. So this is an alternate entry right here. It can be an alternate entry, and then again breaks through the 200 period moving average because it has been downtrending for quite some time. So pulling back right here with a severe sharp move to the downside, and once it breaks above the resistance area, it's into the clear. Beautiful buy setup that is forming here on the daily setup right here with a potential continuation pattern. But don't forget, it's into a lot of resistance right here at $35. Guys, if you want to stay in touch with me, and if you like what you hear, if you want to hear more, visit our website, TradeOutLoud.com, to learn more about our products and our education. Feel free to email me at info@TradeOutLoud.com. Like us on Facebook. I also post a newsletter here on Facebook, and also a lot of trading ideas, invitation to free events, live events, etc. And follow me on Twitter as well. For this class, I have a special offer. It is something that I have never done before at this price ever. This is a course that the regular price is $399. It's called Advanced Technical Analysis Mastery Class. And this course is designed to give you a complete understanding of correctly applying and interpreting different layers of support resistance on technical charts, and that is going to help you to accurately identify trade setups, these buy pockets or sell pockets or consolidation. It's going to help you with stops, to have higher odd stops from which you're not going to get stopped out as often. It's going to keep you in the trade much longer and for bigger profits, because this is key right here. So this is a very, very, very comprehensive and yet very easy to observe technical analysis course that's going to allow you to easily apply technical analysis concepts, and it's going to rule and rules to your day-to-day trading for maximum profits. And again, it's gonna find those high odds entry stops and targets. I would go that far and say that it's going to reduce the number of your stop out trades by 90%. So you're going to see an increase in your in your lack of stop outs. You're going to know how to speculate as well when institutional traders are getting into trades. It is also good. This course is great for day trading, for swing trading, and for position trading, whether you're trading stocks, currencies, or futures. I have plenty of examples in this course. It's customized for stocks, for currencies, and for futures, with examples from all these assets. And with this purchase, you will receive the 130-page manual, the e-manual on advanced technical analysis. Also, you'll receive the on-demand recording, and it's over 5 hours, and of course, unlimited access to myself If you have any questions, you can feel free to email me. This course is only going to be for today only for $69. Today only. So it's only going to be today only. I'm only offering 30 copies of this course at this price. That's it. And when it's gone, it's gone. So you could go to website. It's tradeoutloud.com/ATM. Okay. Am I going to open the program again? I have to see about that. I've actually expanded part of my fund, and I was very, very busy with that. So I'm gonna see. Okay. I'll get back. I'm trying to read through the questions. And guys, if I okay, if I am now going to answer, I know my time has run out, and make sure that if you have any questions, feel free to email me at info@tradeoutloud.com, and if you want to take advantage of this special offer that I only have available for today at only 30 left, it's tradeoutloud.com/ATM. So I want to thank you again for being here, and thank you so much, Winvesting, for inviting me here at MarketFest, and I'll see you soon. So thank you so much.